Hello and welcome to this 12th episode of Investing Not Rocket Science. Investing doesn't have to be rocket science, and this is our non expert guide to portfolio management. Markets turned negative on Wednesday, led by accounting issues at Credit Suisse. Financial stocks have taken a beating, and this portfolio has a 7% exposure to the sector. However, since most of this portfolio is in cash and government bonds, I'm just going to ignore the noise for a few days and relook at this in the next episode. What have we done so far? From episodes 1 to 11, we've defined a portfolio framework and I have added Google, Emerson, Infineon, government bonds, BMW, Deutsche Bank, Citi, ICBC. Today, I'm going to evaluate stocks from the mining industry. I'm looking at Glencore, BHP Group, Rio Tinto, Nippon Steel, Tata Steel, and US Steel. All right, let's dive right in. Why am I looking at mining stocks? There are some advantages. It offers exposure to commodities and provides diversification from other sectors such as tech or financials or healthcare. It could also provide a hedge against inflation. If inflation were to become persistent and commodity prices were to rise, this could potentially increase profitability in these entities. There are disadvantages. These stocks could be more volatile or sensitive to government regulations, geopolitical risks, and most importantly, these stocks could be adversely impacted by slowing economic activity. All right, let's look at company financials. In terms of revenues, Glencore's revenue is larger than all the other five stocks that we are evaluating today. This is a substantially large company. In terms of revenue to market cap multiple, Glencore is trading at about 0.3 times its annual revenues, along with US Steel, which is also trading at about 0.3 times its annual revenues, which makes these two the most attractive stocks that we're looking at today. Closely followed by Nippon Steel and Tata Steel, zero point 0.4 and zero point 0.5 respectively. BHP is at about 2.5 times its annual revenue, and Rio Tinto is trading at about 2.1 times its annual revenue. In terms of earnings yield, US Steel has an earnings yield of about 43.8%, followed closely by Glencore at about 25.1%, and Nippon Steel at about 23.9%. In terms of unlevered free cash flow, BHP leads the way with about 40% as unlevered free cash flow, followed by Rio Tinto at 22%. Okay, let's continue into efficiency, valuation, and volatility. In terms of operating income, BHP leads the way with about 46.3%, followed by Rio Tinto at about 39.5%. Glencore and BHP are the only two stocks with a positive PEG ratio. In terms of realized volatility, all of these stocks trade in the range between 28% to about 53% for US Steel. Okay, price to tangible book value is the lowest for Nippon Steel at about zero point 0.7, and US Steel as well at about 0 0.7, followed closely by Tata Steel at 1.2 and Glencore at about 1.6. Okay, let's look at some trends in the company financials. Revenue growth is pretty much similar for all companies. It's led by the highest revenue growth is by Glencore at about 25.6%. In terms of operating income margins, BHP and Rio Tinto have maintained leadership over the last 5 years. Glencore has a stable trend in operating income margin. However, it's quite low at about 9.3%. In terms of earnings yield, similar for all the stocks that we're evaluating today, except for some volatility in the earnings yield of US Steel. Capital expense margin under 12%. Glencore again quite stable, while Rio Tinto and BHP have seen some declining trends in capital expenditure margin over the last 5 years. Okay, interest expense likely to remain elevated in a rising interest rate scenario. BHP and Rio Tinto once again maintain the lead over the rest, followed by US Steel. Once again, Glencore, although relatively low at about 3.7%, has a more stable unlevered free cash flow margin. Okay, in terms of inventory, typically about 11% of revenues for all stocks. Glencore's are the highest here because it's the largest stock among the six that we're evaluating today. At about 16 billion of inventory, Nippon Steel has a higher percentage of inventory at about 27%. So that could be a concern at some point. Fair value and upside potential, I'm using two methods. One is the analyst target, and the other one is the discounted cash flow method. The analyst target can tend to be subjective to the analyst's opinion, while the discounted cash flow method uses is more objective. Both are important, though. They may be information that the analyst may have, which is not accounted for in the discounted cash flow model. All right. So typically, I would take the average of the two, and in this case, Glencore has the highest potential upside on an average, followed by Nippon Steel, and Nippon Steel is here, and US Steel. Okay. Based on valuations, earnings, and stable efficiency, I'm going to look to add Glencore and US Steel to this portfolio. Glencore is a pretty large firm and has a large portfolio, not something that can be ignored in the mining industry. While US Steel has mostly underperformed, it may, however, benefit in the future as manufacturing in the US increases. These are the charts. You can see here that US Steel is at multi-year lows at about $24. Okay, and Glencore has seen some negativity yesterday. It's down 10% for the day. All right. Okay, so portfolio action. I'm looking to buy Glencore and US Steel. I'm going to put Nippon Steel, Tata Steel, and Rio Tinto and BHP Group in the watch list to come back to them at a later point in time. In the next videos, in the next few videos, I'm going to look at the stocks in the watch list for any opportunities to with the recent market negativity, and I'm going to evaluate potential additions from the real estate sector. This is Investing, Not Rocket Science, a series on building and managing an investment portfolio. None of this is expert advice. I'm just learning alongside you. Please visit our website for the full disclaimers and terms of use. You can connect with us on our website or any of our social media channels. Thank you very much for watching, and I look forward to seeing you in the next videos. Bye bye.